Hello, massive inflation is coming. Do this now, okay? So in this video, I'm going to share what I like to talk about, which is properties and inflation. I love both so much, but property is the thing that literally gets me sit here, getting nerve-wracking, excited, super pumped up to actually sit with you so that I can share with you my prediction for 2022. If you've been to the shops recently, supermarket, grocery shops, gas stations, you may have noticed prices has gone up, right? Prices have gone up significantly in some occasions. We used to buy petrol and diesel for about £1 or so, less than £1. Today it's about £1.50. So again, you may have noticed this prices has gone up, but what you have noticed basically is something that we call inflation. What you have noticed that is price going up. The government has been blaming probably lorry drivers, lack of stock and all that sort of thing. I understand that. But there's something that's actually driving all these prices to go up. Even games, whatever you want to buy right now, the prices has gone up significantly. So in this video, I will talk about how long I think it may last and how long I think it will turn around. So I'd like you to actually stick with me until the end so you can learn what I think may happen with inflation. Hello, my name is Rahim Bah. I'm a property investor. I started my property journey from zero to building a multi-million pound property portfolio. I'm here today to share how you can start and scale your property investment journey. No question, high inflation is here now and it is here to stay. It has been the highest for almost 30 years. It's impacting every sector, from the gaming industry to the travel tourism industry, to the retail industry, to the restaurant, supermarket, oil industry. It's literally impacted everyone and everywhere, okay? So it is here to stay. So in this video, I'm going to share what I think is going to happen, right, going forward, and how I think things will change. And again, I would like you to actually stick with me so we can go through this together. So before we get going, let's talk about inflation first and understand what inflation is. So what is inflation? Inflation refers to a general progressive increase in price of goods and services in an economy. When the general price level rises, each unit of currency buys fewer goods and services. So what they're trying to say is, in a layman term, if you used to buy a chocolate sneaker for £1 last year, or earlier this year, that sneaker now worth about £1.10 or about £1.20, meaning the pound you had last year will not be able to buy you the same chocolate sneaker you bought last year for £1. So if you want to buy that sneakers now, it may cost £1.05 to £1.20, meaning that the price of that sneaker has gone up. Okay, and this has been the case for all the products and services you may have bought already. It could be maybe your game if you like to play games. It might be your petrol price has gone up, or your grocery basket, your shopping basket price has gone up. So it has gone up significantly. So you may not have noticed because obviously everything has gone up at the same time. So again, these are the impacts, okay? This is vitally important for you to be able to take note of this so you understand why the prices are going up and by how much your grocery or your shopping basket has gone up by. Consumer Price Index, also known CPI, is the most common method used to calculate inflation rate. How is inflation calculated? Inflation is calculated by taking a sample of shopping basket of around 700 goods and services each month from a random outlet across the United Kingdom and monitor how the total price of that basket changes. Okay, it could be from different outlets. They bring all those 700 goods there and then they monitor it. They work out what the average increase is in that price. So basically that's how they work out what the inflation figure is, by using the CPI, which is the Consumer Price Index. So also, so that you know what causes the inflation, there are three types of inflations, okay? The number one type of inflation is demand pull inflations. It occurs when demand of goods is more than the supply in the market. Say, for example, you wanted to buy a chocolate bar. You used to go and find lots of chocolate bars in your local supermarket, but when now you go, there's less sort of chocolate bars in the supermarket, meaning there are more people wanting to buy the same chocolate bar, and there's less product to satisfy everybody's wants. That's the first example. This then triggered the price to go up, because what had happened, there's more people wanting to buy chocolate and less chocolate. Guess what happened? Because there's more demand, the suppliers then charges more for that same chocolate bar that you were buying at £1 for, say, £1.05 or £1.20. Okay, and the second type of inflation is cost push inflation. Cost push inflation is when it costs the production company more to produce your chocolate bar. So suppose it used to cost them about say £80 per 1,000 chocolate bar. Right now, that 1,000 chocolate bar is now costing them about £100 or £120. So obviously that then drives the price of that chocolate bar up, because it costs them more to actually manufacture it. The third type of inflation is built-in inflation. It occurs when expectation of future inflation result in built-in inflation. Right? So these are the three types of inflation, but the one that's impacting us right now is the first two. The first one, which is demand pull inflation, which occurs when there's more demand for a good or services, and then obviously there's less supply in the market. So that then causes the prices to go up. And the second one is the cost push inflation, which means it costs the manufacturers now a lot more to manufacture the chocolate bars, as an example I've just showed you. So basically costing them more because, one, the lack of drivers, oil prices has gone up, and the shortage of every sort of product that they use to actually manufacture or produce the chocolate bar that you get from the supermarket. Okay, so now let's look at the consumer price index. Okay, it's very important for us to see what the movement, by how much it has gone up by. So looking at the chart, looking at December last year, December 2020, the inflation rate was less than 1%. It was 0.8%, so it's significantly low. Future forecasting that to today, now as of January, right, that has gone up to 4.6%, right? So that has increased significantly from less than 1% to 4.6%. Again, you can see what has caused that. You may have seen in the news recently, oil prices are going up, gas prices are going up. So this then have a ripple effect, and then obviously impact to the wider community. And again, you can see then, if you've been saving money with the bank with almost 0.001%, you'll be making loss, because the amount of interest you would have gained from the bank for saving that money would have been less than the inflation, unless if your savings would have generated you 7+% interest. Okay, if anything less than 7% interest on your savings, you would have generated loss, because looking at the inflation rate now, the same amount, looking at the inflation rate and the Bank of England interest rate, or your local bank interest rate, you can see inflation outweigh that interest rate. Again, interest rate currently is about maybe 1% or so, and inflation is about 4.6%. You can do the math. You can see then, if you would have saved that, if you would save money in the bank, you would have actually made a loss in that situation, because obviously the inflation has outperformed the interest the bank would have paid you for the savings you've made. Again, you would have made loss there. So the government, the Bank of England, actually estimated that, right, inflation rate to be 2%. And looking at the figures now, we're at 5%, right, 4.6%. You can see then the forecasting is not working, because obviously what they've anticipated and what's happening now is different. So again, that may rise, significantly hit 2022, because obviously now the world has started moving after COVID, and then obviously the manufacturing companies are catching up now with demand again. We expect that to increase slightly throughout 2022. But the Bank of England could also control that by obviously increasing interest rate, right? That then allows the spending to reduce a little bit to be able to control it. But right now you can see they literally more than double the interest. The inflation is more than double to their forecasted inflation rate. Okay, and property prices has gone up since January last year to now by 11.3%. Again, absolutely amazing for anyone who's invested in property right now. Okay, and in some areas have seen 15% capital growth. Right? Again, some people have some areas seen 15%, and even in the worst areas, some of the areas have seen 11.3% in average. So again, all this is factored in by the demand, because more people wanted property. There are less properties out there, and guess what? That then pushes the price up. So if you bought property last year or 2019, your property price would have gone up significantly. So you may be laughing right now. You may be absolutely delighted about the increase. But if you were to be one of those who bought properties where there's 15% increase, and again, you will be laughing big time, okay? According to Savo, which is one of the biggest estate agents here in the UK, and Mortgage Solution, which is also one of the biggest mortgage brokers out there, they've anticipated, they literally forecasted that UK house price is projected to grow by 3.5% in 2022. Again, this is just a forecasted figure. Okay, looking at what happened last year, they forecast it to be 2% or 2.3%, and the property prices went up by 11.3% in average, and in some areas was 15%. And they're forecasting that to be basically 3.5% in 2022. This is money.co.uk forecasted show property price will rise by 35% in the next 5 years. I will repeat this again. This is money.co.uk. I'm not making these figures up, by the way. If you go to thisismoney.co.uk, you can see the forecast there. It shows that they anticipated property prices to rise by 35% within the next 5 years. Again, you can see why I always preach to people, do not wait to invest in properties. Invest in properties and wait. Don't let that wave miss you, okay? If you've been procrastinating about properties, or not sure whether you want to go into properties, you need to start thinking about it now. Take action so you don't miss this wave, because if you buy properties now, it's likely to go up by 35% in the next 5 years. And it's an investment that will not only generate you capital appreciation, it's an investment that would also generate you massive cash flow, okay? Massive cash flow. So with high demand, with ridiculous high demand, inflation is here to stay with us for the foreseeable future. So if you're ever thinking about investing in properties, this is the time to actually start thinking about it. If you want to buy more product or stock, supermarket, groceries, you better buy it now, because obviously things would go very expensive for the foreseeable future. So what is the solutions, and how can we hedge against inflation? It is very simple, okay? You just have to take action to implement what I'm going to say to you now, okay? Don't procrastinate about it. You take it, go and do it, okay? Number one thing we need to do, basically, we need to start investing in properties, right? Do not wait to invest in property. Invest in properties and wait, because it would pay you a ridiculous amount of return, okay? If you've been thinking about it, procrastinating about it, thinking about you don't have time to do it, this is the time to actually do it. You don't want to miss the wave, okay? You don't want to miss this inflation. You don't want to miss what's going to happen in the next 5 years. As you know now, they've forecasted property prices to go up by 35%, and you don't want to miss that, okay? The second thing you need to think about also, the second way to resolve this actual inflation, basically, you need to look for someone that you could joint venture with if you don't have money, okay? Don't make money a reason for not to invest, okay? Find someone who you could joint venture with, a joint venture partner, someone who's got money and you've got the time, so you can put the time and they then invest. It could be anybody. It could be a family friend, it could be your wife, your husband, your boyfriend, your girlfriend, your university friends, your college mate, or your schoolmate if they're all grown up now. So you can joint venture with these people so you can invest in property. And the third thing also is, if you have a property already on a mortgage, look at the property. You may need to remortgage that property again because that property may have gone up in price. The reason why it's good to remortgage now, interest rate is at rock bottom, right? And house prices has gone up. So basically, unless if you're living under a rock, you would have known how low the interest rate it is right now. So what you do, you go and revalue your property at a higher rate and look for the lowest interest rate for your property, right? And lock it in for 3 to 5 years. And guess what? You use that money, equity you would have gained from having that property, and invest in real estate, invest in properties. So there's another way to actually go and get it. If you're thinking, saying you don't have money, if you've got a property, look at that property, get that property revalued, and you may be surprised to see how much money you'll be able to pull in from that property. Okay, and the fourth thing you need to think about, basically, if you have a property already, you're renting it, ensure there is a clause to increase your rent annually, right? Ensure there is a clause to increase your rent every year, because what happens when inflation goes up, you need to increase your rent to reflect the increase in price. So if you haven't factored that in your contract, if the contract is about to expire or has expired, renew the contract, have that clause there that says your rent increases by whatever percent you want to use in a yearly basis. So the tenant knows that property price, their rent would go up gradually to reflect inflation. Again, if there are family members who are renting your property, find a way to communicate with them, because sometimes if they're families, they just move into those houses, they just pay rent as usual. But you need to explain that to them now so they understand that, hey, prices will be going up. Give them example. Say if you go to supermarket today, things are expensive. If you want to buy petrol or diesel, this is the price right now. So obviously my mortgage also would be going up as well. So again, explain it to them in a way that they understand, even if they're not relatives to you. If they come backlash, especially if you've never increased rent since they moved in, right? You have to explain it to them in a friendly way so they understand that you're not just only increasing the rent because you just want to do it, and because it is your house. So again, communicate it with them effectively to ensure that clause is in to increase rent annually. If you don't like to deal with property, invest in REIT, right? It's called real estate investment funds. You can invest in REIT. It's like a stock or shares, something like that. These companies buys or own massive property portfolio, and then obviously that way, then if you don't like to deal with tenants, any increase in their share price would also help you get a return on that investment. Again, it's all kind of a real estate thing, but without you owning it. Okay, this is my take on inflation, but I hope the Bank of England is right. They'll be able to amend the inflation rate to go back to the figure they wanted, is 2% instead of 5%. I really hope they'll be able to decrease it, right? And demand is still high and supply is very low. So again, that's a telltale sign to tell you demand is here to last, and supply also is going to reduce because of how the demand is right now. So again, it's a telltale sign to say we have to prepare ourselves nicely to ensure we are protected, our family is protected for when prices continue to rise. In the meantime, do whatever it takes to hedge against inflation, whether it's to invest in real estate yourself, whether it's to remortgage your property, get some money out and invest in property, whether it's to lock yourself with the lowest interest rate as it is right now, whether it's to increase your rent gradually with your tenant to ensure you are protected, or to look for someone who you could work with to actually take your property investment journey to the next level. I really hope this video has been helpful. If this video has been helpful, don't forget to hit the like button below. Subscribe to my YouTube channel for more of these amazing videos. And also, I would like to invite you for a 30-minute, free 30-minute strategic call where you would ask me anything to do with properties. If suppose you want to remortgage your property, you can ask me about that. If you want to learn about property, you can ask me whatever questions you want in that strategic call. It's absolutely free, no string attached. You can call me, we can talk about properties. You could ask me a question, and I also I would get to know you as well, so that we would be able to sort of guide you, advise you on how you could start and scale your property investment journey. And also, I'm running a free property investment crash course every month. right? So click on the link below to join me in my next property investment crash course. Again, that crash course is absolutely free. It's a day-long crash course where I share the most recent property strategies, how you can start and scale your property investment journey, and what are the strategies property investors are taking advantage of to make ridiculous amount of money. And again, if you like this video or any of my videos, don't forget to hit the like button below, subscribe to my YouTube channel for more of these amazing tutorials. Thank you so much for watching.